Yeah, I mean, I think with the ETF price approval for Bitcoin, if you wait until the actual approval, say it gets approved in January, like you're not gonna you're gonna miss most of the rally, right? I mean, you're kind of seeing the market, in my opinion, start to bottom out here, and I'm sort of expecting it to rally into the end of year, sort of assuming that there's a January approval. And
Hmm.
then if you do get a January approval, then you probably get, that's the type of thing where you get like a 20% gap up instantly within like a few milliseconds after it gets approved. Um,
Yeah, well, when they do their private placements, they're going to need to
right. So
buy
if
a
you,
bunch to, just at market, whatever. They don't care what the
yeah,
underlying
I mean,
asset
it'll,
is.
but like if you wait until the official approval and then, come home and buy Bitcoin 24 hours later or even an hour later, like you're going to miss most of the move. I think most of the rally will occur before, the official approval.
It's probably reasonable. Yeah, I mean, you saw the way that the ETH traded with the futures ETF going live.
Yeah, I mean, I'm not
Strong, pretty
saying that
strong,
like,
12% down or something since it went live. But yeah, on what you said, I think that it's interesting. I was listening to a Bankless podcast today, and they were talking about how when I think it was the Bitcoin futures ETF, the first one that they approved first, um, the other players were upset because basically it was approved. I can't remember how far in advance, but they now have like 90+% of the volume just because they were first. So yeah, I think I've kind of heard the same thing too. It'd be like the grayscale will get approved first, and then like every single other one will all be approved at the same time, just to make it an even level playing field.
yeah, I mean, at that point, you're probably, you know, fast forward to January, say it does get officially approved. Price is probably around 50K or maybe even near all time highs by that time. And, in that scenario, say it does get approved early January, like, if you buy into the parabolic rally, that's, never a good idea, even on bullish news. Now, like say it pumps up to towards the highs and you buy at the highs, you might not buy the exact top. It might, push up, another 5, 10, even 20K more. But the idea is just like that would be the point in time where you probably start to see like a high get put in, right? And then a higher, market move down a little bit to set in a higher low.
Yeah, it's funny we were talking about waiting for the ETFs all of last cycle, and we're already almost into the next cycle.
Yeah, right. But I mean, it is a very, very, very big demand catalyst, and it's one of those things that is really interesting because with Bitcoin, obviously, I like to focus on supply because supply is, at least in Bitcoin, it's mathematically certain, right? I know exactly what it's going to be 150 years out, right? But demand is, it's hard. It's a lot harder to predict because it's a lot of times it's governed by emotion. But in this sense, I think you can kind of get a sense, at least from what we've seen, that there's a huge demand catalyst coming. And in my opinion, if you're smart, you want to front run that.
Yeah, it's hard to know how much demand there really is, right? Like we're in the driest of times right now. It's obviously not going to get lower than now. So
Yeah, man. I mean, but like people sort of have this mentality that like in order for Bitcoin to rally, that the Federal Reserve has to start buying bonds, and it's like not like it's just this arbitrary thing that exists in people's minds.
no,
It,
you just need people to stop
it's
selling.
certainly a bullish catalyst for sure, but the idea that that has to happen for Bitcoin to go parabolic is also ridiculous.
Yeah, I mean, you just need people to stop selling. And another interesting thing is the higher the price goes, the new coins that are coming into the miners, they're not going to need to sell as much. some of them are going to, be using a hodl policy or trying to sell it not at the beginning of the bear, bull market.
Yeah, I mean it'll.
So,
I think the current block subsidy is 900 Bitcoin per day.
yeah, I mean it's not a huge amount compared to the total volume of Bitcoin daily, but just interesting if that's the only new supply that's coming available. And I think that the higher that the price goes, up to a reasonable level, I think that those miners are going to be hodling their coins. Now they're just, they're investing heavily in the next cycle and buying their new rigs. So they're basically, unless it's, Mara or Hot, basically with hodl policies, everyone else is pretty much selling everything that they're mining just to buy new equipment.
Yeah, so this kind of ties into one of the things I wanted to talk about today, which is energy, and talk a little bit about oil, but of course I want to tie it into Bitcoin. And I don't know if you've heard. So I just want to revisit like one of my original premises and sort of establish that and build off that, is that Bitcoin bottoms at its cost of production. So if you look at like the energy cost to mine a Bitcoin, that's typically, you see Bitcoin bottom out in the bear market around that point.
Yeah.
And
Yeah.
that's that.
I've
Yeah.
seen that proven many times.
Yeah. And that's why your bear markets all have exponentially higher lows, right? The last one bottomed out at 3,000. This one bottomed out at 15,000, right? The only reason that is because of the halving. That the halving has a measurable impact on the cost of production, right? The next halving is targeted for this April, about 6 months away. And what's crazy about that is, think about what people sort of discount the halving, but on that day, the cost of production basically jumps up twice as much.
Doubles, yeah.
Yeah. So that means the floor doubles immediately, right? Like Bitcoin is sort of, between the cycles, the floor is sort of like slowly rising underneath it. And then once you hit the halving, the floor abruptly shifts upward. And
So do you think some of the miners are in trouble then? If they're just getting by right now and their revenue is going to get cut in half.
oh yeah, totally. Yeah, you see that every cycle.
When do the miner I've been heavily investing in some of the miners, so it just hit me that their revenues are going to get cut in half. What do you know? Like the ones that struggled, they struggled through the bear market. They were overexposed, but
Yeah, so I think when you're in my opinion, and again, I'm not an advanced mining expert, but if I were to start getting into it, I would look at the market for ASICs, right? So, whenever the ASICs are very cheap, there's a lot of inventory. That's going to be the good time to buy mining equity, right? Just because people are getting in there cheap, getting their mining rigs. It's sort of when ASICs start to get like extremely expensive that you want to avoid those miners.
right. So like the big ones, I guess they're buying now before it's expensive, right?
Yeah, I mean, so if you think about it, if so, assuming you are a well-capitalized miner and you survive the halving, you're going to be going under a lot of stress, but it'll cause if you do survive, there's going to be a lot of your competitors who don't survive, which means that hash rate comes off the market, which means that the difficulty adjustment will adjust downward after the halving. And then, you can get more, you can mine easier. So sorry, go ahead.
I was just gonna say, but then there's always new participants. Like the hash rate has historically always gone basically vertically up, right?
Yeah, a good way to think about this is if you buy cheap ASICs equipment now, say so everybody's like, um, mining at the cost of production, or saying you're buying Bitcoin at the bear market lows, you're basically buying at the cost of production. But what happens after the halving is that price moves up abruptly, and then miners are mining, accumulating coins at a lower price because the cost of production just doesn't move upward as fast as price does, if that makes sense. So after the halving, you'll see price, start to outpace the cost of production, and you start to get that premium there.
Right. I'm looking at a chart here. Let's start from 2017. So I see, looking at 2017, 2018, hash rate went straight up, peaked November 2018. And then...
So I sort of laid out the foundation for why, price mine or bottoms at the cost of production. And then you can sort of, if you accept that premise, you can see what people mean when they say that hash rate leads price. And it does. Hash rate does lead price. And the reason is because of the difficulty adjustment. So when you add more exponential amount of hash rate to the network, like it's happening now, the difficulty adjustment adjusts upward, and it becomes more difficult to mine Bitcoin, which means that the cost of production shifts upward. And that's why price chases hash rate.
Yeah. So I'm looking at the hash rate, let's say for the previous cycle. I mean, it's kind of weird because it was COVID and stuff, but whatever. So it was basically fairly straight up from the bottom of 2018, like beginning of 2019, fairly straight up. And then it was COVID, the hash rate fell off, and then it went back up. So it was just, and then it was basically all of 2020, it was choppy. It was like strongly up. It was like V-shaped recoveries, but then like big drop-offs. You think those are from like significant miners just failing and not being able to pay for their operations?
And just out of curiosity, what point in the cycle was that you were talking about?
Well, so the halving was April, right? So March, that was COVID, drop off, went back up. May went back up, and then May crashed again all the way until October, crashed again all the way until May 2021, which was Terra, and then there was just a crazy drop off.
So I was actually trading pretty actively during that time because I was locked in my house by the government. And I noticed some market behavior that, was sort of indicative of that. Like, I remember, like, just after the halving, you didn't get an immediate reaction in price. You'd had the COVID spike, and then price had kind of recovered from that collapse back towards, roughly like 9,000. And it spent a lot of time in a consolidation around 9,000 for a couple months, actually after the halving. The halving actually happened in March, and it's been about like 7-8 weeks consolidating after the halving before moving upward. And I remember in that consolidation, like there's the type of price action where, like, just price would just drop like $1,000 in like a couple seconds. And of course that in percentage terms, like 10% back then in a couple seconds. And looking back, what in hindsight, what was probably happening is after the halving, you're probably witnessing miners literally fail in the price chart. And what do miners do when they fail? They sell their entire Bitcoin treasury at market. And it's like that. These are these things you just can't like predict, right? The idea that you can time when that would happen is like ridiculous. you can kind of like get an idea that you'll get more of those flash spikes after the halving, but like you don't know like exactly the moment that they're going to do that, right?
Yeah, well, I guess it must have hurt having, let's see, Bitcoin falling back to, well, let's see, where was it here? It fell. Oh, here's the price. Yeah, like 5,000. It was sub. It was basically sub 10,000 until September. Well, that was like DeFi summer, right? And then basically it started to take off after that.
Yep.
So you're looking at, yeah, it was 9,000, 10,000. So we didn't really get above 10,000 strongly until Q4, and that's where
Yeah.
the bull started.
Yeah. I mean, it doesn't happen instantly. It's, supply and demand is a fundamental factor, right?
I'm
It
just saying from the
absolutely is.
standpoint of like the COVID crash really probably set people's expectations off in terms of what they were planning for cash flow and runway and stuff like that.
Yeah, definitely. 100%.
No one was expecting to go back down to $3,000.
Yeah, man.
At the
And, for me, that was my first cycle. Well, not actually. I mean, I got into Bitcoin at the bottom of the last bear market. So, sort of 2009 or December 2018, January 2019. And, so it was my first halving, right? That last halving. And I remember people back then were saying, yeah, the halving doesn't matter. It's not important. And I actually, I sort of believe that. Now I understand why it is important. And it absolutely is important. But now you see the same thing. I mean, you're just going to have the same thing happen every halving cycle. You're going to have people saying that, it doesn't matter. And they'll probably reference the size of the block subsidies relative to the volume. But, the point they're missing is that the block subsidies generally, regardless of whatever your narrative is, represent sell pressure in the market. It's more supply, which is typically sold to generate cash flow. And that's just reality. And when you have that new supply hitting the market getting cut in half, it's very significant. Plus, if you track the cost of production, you see where I'm going there. But yeah, it'll happen every cycle. They'll be in the 2060s and people will be saying the same thing. But it's a good illustration of like how, and I think this ties into energy really well when you talk about like supply and demand. So energy is also a scarce commodity. It's not as scarce as Bitcoin. In some ways, though, it is actually more scarce than Bitcoin in the sense that, Bitcoin is, people always refer to Bitcoin as deflationary. It's actually not deflationary. There's new supply hitting.
I agree with you. It's funny when people say that.
Yeah, there's new supply hitting the market constantly. Of course,
Inflation is deflationary.
Yeah, but it's known supply and scheduled supply. So in a sense, Bitcoin actually represents the number zero. It's neither inflationary or deflationary in the grand scheme of things. And you could argue that oil actually, well, it's not a monetary good, so it's not inflationary or deflationary, but you could argue that it's more scarce than Bitcoin because, it'll run out. And that's something, I think is relevant to what's happening today with the war in the Middle East. And big picture, like by 2050, half of the world's oil supply will have been used, which is kind of crazy if you think about it.
I didn't know that.
Because, on the other hand, we have to make sure that GDP rises exponentially year after year after year.
Yeah.
And in order to do that, we need rising energy inputs. So it's like, okay, energy inputs are diminishing. How are you going to raise GDP exponentially? Like the math doesn't add up. And, you know, people are sort of losing sight of the fact that, I mean, I'm sure you're looking at like the debt clock. You look at there was a tweet I saw the other day that showed that like in the last 19 days or so, the U.S. government had issued 1.2 billion in debt for the last hour, for the last 19 days. So
Yeah, it's ridiculous.
Over $1 billion per hour for every hour for 19 days. And so when you think about that in the big picture, like there's all this debt outstanding, right? If you think about the supply of treasuries and other sovereign debt versus the supply of energy, you got this total lopsided thing. And basically the supply of currency and the supply of treasuries is the same thing. They're the same thing, basically. Treasuries just have duration risk and interest rate risk, but it's basically the same thing. And so you have like this massively inflated bubble in sovereign debt that's basically trying to lay claim to the same fixed, scarce supply of base energy inputs. And so it's sort of a disconnect from this reality, you know, biophysical reality of the world, which is that the economy needs energy to run, not debt. And yeah, I mean, it's kind of crazy because at least the situation in the Middle East, like to put another, so by 2050, half of the world's oil supply will be depleted, but majority of the oil is produced in the global East, not the West. And over 50% of all the oil in the entire world is produced in the Middle East, specifically in the land area around the Persian Gulf. So it's called the Black Triangle. Literally 50% of the oil reserves come from that area. And you're basically seeing like a unilateral alliance against America and the West forming in that region. And that doesn't even count Russia's oil. So not only do you have this like natural scarcity of oil, like in the world, but you're also seeing like our governments create situations where we're cut off from the main supply of that remaining oil.
Well, a few more production cuts and we're not going to have anything flowing.
Yeah, so it's kind of fucked up. I mean, yeah, so like I don't know if you noticed, like a few months ago, OPEC cut production of oil, and people had different theories about why that was. Like a lot of people were saying, oh, they predicted depression or recession coming, therefore they're cutting oil. And the reality is, the only reason, in my opinion, they cut production was because price went low, right? It sort of ties into like the inelastic nature of Bitcoin supply. Like if Bitcoin price goes down, you can't like cut production or you know what I mean, or anything like that. But with a commodity, you know, like take gold for example, if the commodity price goes down, you cut production, right? Because what are you going to do with that production? You're going to sell it on the market instantly. So, and vice versa, if the price of oil were to go parabolic, all of a sudden OPEC would increase production dramatically, right? Because obviously, because they want to get more of it and sell more of it.
Yeah, I mean they're just totally manipulating the price just because they can at this point.
Yeah, so I mean, like,
it's not that easy to turn back on the taps though. Like that was basically a big thing that was, you know, raised as a concern when, what was it? Was it in the U.S. a lot of the rigs got shut down? Oh yeah, during COVID, and it's super expensive, and it takes a long time to get them back up and running. So it's not just like, oh, let's just turn them back off, turn them on.
You talking about the oil rigs?
The oil rigs, yeah.
Yeah.
That's a major problem is when a rig shuts down because it's probably, because it's not profitable, such as like during COVID times. You can't just unsolve that problem by turning it back on when oil hits $100. It's, it just becomes an accentuated problem at this point. And
Yeah.
then, and that was the issue of why, the people had a big problem with why Biden wasn't willing to. What was it? It takes 10 years for an oil rig to be profitable. So when he wasn't willing to guarantee the future of the oil industry, um, that's why
Yeah. I mean,
a bunch of the companies basically just said, "Well, fuck you." When he was selling the SPRs and having calling out the oil companies for making profits and say, well, fuck you, we're not going to go, invest in new exploration, setting up new production if you're not even going to guarantee that we're going to be able to get our money back.
yeah, the SPR thing is kind of like a little bit, I think, overblown in a sense, just because like the U.S. has like is a major producer of oil as well. So like about 13% of the oil in the world comes from the U.S., which is basically the same size of production as Russia. Actually, Russia's a little bit higher, like around 15%. But
Yeah, yeah.
it's basically, the U.S. exports like billions of barrels. you
Well,
know,
in Canada, even
yeah.
more.
So the drawdown in the SPDR, it would be a big deal if like we were a country that didn't have its own domestic oil production.
Yeah, like Europe.
And
Well, like the partners, right?
yeah,
Europe
so
or Japan.
and and basically, so the U.S. produces about 13% of global oil production. Canada about 6%, and a little bit in like the Venezuela area as well. But for the most part, I mean, it's mainly just the U.S. Most of the Western world, with the exception of Canada, a little bit, doesn't really have, like, Europe's fucked. Europe is so fucked.
Oh, it's beyond. Yeah.
Australia is fucked. Um, yeah, it's just not a good situation. And
Yeah. Well, I think partly that's where the SBR needs to go to is to be able to guarantee their allies have constant flow if there was a crisis also.
yeah, I think so. Yeah, I mean the flip side is America's oil reserves are actually bigger than Russia's. Believe it or not, not quite as big as like the Persian Gulf area, but actually bigger than Russia's, surprisingly. The Permian Basin in Texas and a little bit of New Mexico is just a complete beast in oil production. The U.S. does not have to worry about oil reserves as long as it's able to dig it out of the ground. That's a different story, but and a lot of the reasons why our production's not higher than it is and not higher than 13% is just because the political climate and the hesitation among investors to even invest domestically in something like that. But interestingly, it's actually kind of, it may end up helping us in a way, because while our politicians have like sort of dampened our ability to drill our own reserves, it sort of kept us from depleting our reserves, right? So we're depleting the rest of the world while by issuing them debt that isn't going to be worth anything relative to their oil, which is kind of crazy if you think about it, because we basically, the world's starting to wake up to it now, and they're starting to resist against it, and they're like, we don't want your treasuries for our oil. So that game's over. But we did it for like 20 years, or longer than that, like 100 years. You know what I mean? Which is crazy to think about. And, it goes to show you that there's not as stupid as the politicians look, there are people, in government, who are in power that, their power is not affected by election cycles, and they're pretty smart, and they do have a plan. But yeah, so I guess it's like America is all right, but we're gonna have to subsidize all our allies so long as they remain our allies. And relative to we're basically the same production level as Russia. If you add Russia and Saudi Arabia, then you're talking two-thirds, maybe even over two-thirds of the entire world's production. And we just got cut off from that. And so I think it's that's emblematic of the idea that the West is kind of past the event horizon of its unilateral power and control of the world. Because ultimately, your ability to monopolize those energy inputs, that's what powers the war machine. That's what imposes your physical will on other people, and creates an economy. And you're seeing the Eastern world coalesce around, again, two-thirds of those fossil fuel energy inputs. And people might say well, what about renewable energy? It's dude, everything costs oil to do. Even if you're making solar panels, you need giant drills to dig shit out of the earth to make it.
Yeah, the amount of oil amount of oil that it takes to build those things.
Yeah, you need oil to drill into the earth. You need oil to refine the commodities to make your solar panel. You need oil to fly it over. You need oil to put it on the boat. You can't get away from it. And that's the scary thing about the future is there's a lot of innovation happening in nuclear energy, especially in electricity production. But again, you're not, at least from my knowledge, you could have revolutionary nuclear energy technology, but you're not going to have compact nuclear, reactors that can go in cars, that can power machinery.
I saw an interesting post. It was about I think it was about the Navy ship that was getting sent over to Israel, and it was I'm pretty sure I read it right, but it's 300 meters long, and it's powered by two nuclear reactor cores that have a half-life of 25 or 50 years until they need to be replaced or refueled.
That's pretty crazy.
Let me look it up. Maybe the HS Truman or something. Navy ship powered by nuclear.
I mean, personally, I think I do think that's kind of the future as far as energy production goes, or excuse me, as far as electricity production goes. But I don't know how much it does, with heavy machinery and commodity refining and all that. Now, I could be wrong. It could maybe see technology get advanced, and basically anything you can do with a combustion engine you can then do with a nuclear engine. I don't know. I mean, maybe that's possible.
Yeah, I just read this yesterday. I'm trying to find it. Oh, the nuclear ship Savannah. I think that's it. Not this one, but
kind of the way well, I guess my point was that it's kind of scary that you're moving into a world where oil is just not going to exist like it does today.
Yeah.
And we're talking over 30 years, but again, in 2050, there'll be half the oil reserves. And a lot more people, probably, if we don't all kill each other in World War III, so if that's the case, and all likelihood is like people will probably not enjoy the same standard of living unless there's some technological breakthrough that can replace oil, which is a big if, of course. I think I'm sort of bullish on the electricity production. I think nuclear will create, rapid energy production, and that, especially like with, even that can meet the needs of AI expanding and consuming all this electricity. I think nuclear, especially if you get like nuclear fusion reactors, like that's not gonna. I think you'll have abundant electricity.
Yeah, well, and our cells are going to get stronger. I mean, it's the same principle, I think, as like hard drives or computer storage. It was like every year, the amount of storage that you can hold double, and the size of the chip gets cut in half. So, like, theoretically, the same type of principle applies for batteries. It's every year you should be able to hold twice as much power and cut the size of the battery in half just through technological advancement.
Yeah,
So we're so in the early days still of of these alternative. I mean, you look at Tesla and EV vehicles. Every year, like I still haven't gotten. I'm not interested to buy an EV yet because I don't want to have to repower it. I know that in a couple of years, Teslas will be able to go a couple thousand miles between charges.
definitely. Yeah. Yeah, for
So
sure. I mean, Tesla is, those are crazy cool. And, Tesla is almost they make almost more revenue selling batteries than they do Teslas. A lot of people don't know that. But yeah, the battery technology is definitely getting better. So the ability to, harness electricity and store it. Yeah, for sure.
oh yeah, Tesla as a company is such a beast. They're going to be. I think they're going to be the major distributor of like the SaaS company for all of the EVs. They'll be running the computer programs that they'll license out. All the
You,
proprietary parts they'll be
it's kind of
distributing.
crazy. One thing that dawned on me is that Elon Musk is like literally single-handedly the one human being who has reduced carbon emissions more than any other human being that's ever lived by far. Like nobody else is even close. And people who care about the environment, tend, if they're in the left political leaning, hate this guy. You know, I mean,
Well, because they don't really
and
they
it's
don't really
like
care
he
about
literally, like, if you think that global warming is destroying the planet, like you should love Elon Musk because he's literally the guy that has done more to stop it than anybody. But that's the world we live in. We have, like in the U.S., the political party that calls people Nazis, now they support people who support Hamas, who want to eradicate the Jews. I mean, it's crazy. It's fucking crazy sometimes, but
Yeah,
it's the
it's
world we
it's
live
hard
in.
to go on Twitter these days.
So, like, basically the point I want to illustrate is that the supply of treasuries versus the supply of oil is a huge imbalance there, right? And if you think about like what debt is, it's a claim on the future, right? So you have all these people, all this exponentially inflated debt, which represents people's combined claims on future production, which is going to be constrained by diminishing energy inputs. So yeah, eventually that will come to reality, and supply and demand. It's basic reality in markets. There's way more debt than there is energy, and therefore energy is more valuable than debt. But like one nuanced thing that I think a lot of people don't realize is that, I think people realize that, when you look at the Dixie or the dollar index, it basically is chasing yields, right? If yields go up, the dollar goes up, the Dixie goes up. If yields go down, the dollar goes down, Dixie goes down, basically. But on the big picture, De-dollarization causes dollars to rise relative to other currencies by reducing the supply of dollars as they move into other currencies. But the outstanding dollar-denominated debt remains fixed. In other words, as you de-dollarize, you reduce the supply of dollars, but you don't necessarily reduce the amount of outstanding debt. So therefore, and debt represents demand, right? Because you have to pay that cash flow in the future. So that's why, like, as the world is de-dollarizing, the dollar has risen, since like 2 years ago, or since they froze treasuries.
Interesting. Is it because people are basically covering their shorts?
Yeah, and people don't realize that. Like, they don't understand the markets like that. So they think, oh, dollar goes up, that means that's dollarizing. It's like, no, that's not what it means. The opposite is true. If the dollar goes down, that means the world's dollarizing. And if you think about the job of a reserve currency is basically to supply the world with liquidity for their reserve currency. So yeah, that's.
Well, they're doing that well.
Yeah. Well, I mean, it depends on who you are. Yeah. Now it's political, right? So you only get the liquidity if you're in good graces. And that's part of the reason why people are moving off that system. So basically what happens in that scenario is that, countries hedge this by purchasing energy reserves with their domestic currency that will rise in value relative to their dollar liabilities. That is, their energy reserves will rise in value relative to their dollar liabilities. And this is where it gets really interesting, because like in the past, people used to buy, the old paradigm was, like I said, we convinced the world to sell us their energy for our paper. And we did that for 100 years. And, so the old narrative was, if I have a trade surplus, I then use that surplus capital to buy treasuries, which I hold, and then I can use those treasuries to buy energy. And, before there was a sovereign debt bubble, those treasuries basically remained, stable value relative to the energy you were trying to purchase in the future. But that's not the case anymore. We have a sovereign debt bubble. It's getting exponentially worse. That means that has implications for the future, that value of that debt relative to energy will fall exponentially. So people are not doing that anymore. They're not storing their excess capital in treasuries. They're buying energy reserves. And
so, like, what countries, for example, are doing that right now?
Pretty much every country in the East, and countries in Europe too, secretly. They're not buying oil from Russia. They're buying it from, India, who bought it from Russia,
just repackaged it.
Yeah. But so the problem with energy reserves is they're not durable, right? You can only store so much oil, right? In its finished form.
I can't imagine. I was going to say, I can't imagine that the European countries are able to stockpile it as fast as they're consuming it. Like, they're just trying to get by each winter.
Sorry, finish your thought. Sorry, I didn't mean to interrupt you.
Yeah, no, I was just saying, winter's coming right now, and it's going to be a whole new thing again. Like, especially with high prices. Oh, here comes the Europe energy crisis again.
Yeah, I mean, you have an inventory of energy. Say you want to purchase oil, you have a certain amount of square footage in your to warehouse it. So you got your square footage, and then there's a certain time that you can hold the oil. And honestly, I don't know how long it is, but oil does not last forever. You need space to store it, and it does expire. So there's a physical limitation on that. But where it gets really interesting is, whereas people used to use treasuries for their long-term capital to purchase energy, what's sort of replacing that is the energy futures markets. So you can enter deals, with Qatar or Saudi Arabia, and you can, agree for them to sell you oil in the future. And that's a better deal than holding treasuries, because treasuries are going to fall. Fast forward 2-3 years, when you want to go sell those treasuries for your oil, you're going to get fucked. So you might as well just secure a deal with Qatar right now to sell you oil 2-3 years later.
Sure, and those futures are great until you have COVID show up and supply chains get cut off.
Yeah, I mean, you. That's true, but I mean, the idea of the futures market is that Qatar will honor that, and you sort of have to take them on trust. It's certainly not as good as having your own oil reserves that you can rely on, for sure.
Mm-hmm.
But I'm just trying to make the point that more and more countries are doing that, right? If they have a trade surplus, rather than go buy treasuries, they take that trade surplus and go to Qatar or go to Russia and say, hey, I want to purchase a futures contract that gives me the option or the right to buy this oil in the future. And it's there's an element of trust in that contract, but so is it with the Treasury, right? I mean, we've seen you can get cut off from treasuries too. So
yeah. So you think we're going to like $200 oil in the next 18 months?
No, I mean, so first of all, I wouldn't read too much into short-term movements. I mean, we're sort of on the edge of a recession, right? And obviously, when you have a recession, demand for oil goes down. That's just the reality. And you also have the world de-dollarizing, which, as I discussed before, causes the dollar to rise, or the Dixie to rise relative to other fiat currencies, which does affect the price of oil and it is a headwind for oil, right, in dollar terms, if you're looking at price of a barrel of oil relative to the dollar. So those are a couple headwinds, but yeah, big picture, yeah, it's bad. But I'm not saying like there's a lot of headwinds for sure. I do think if there is a major crash in oil, it certainly is a good opportunity to build a long-term position. Because again, I think I mentioned this previously, but basically, it's really helpful to have a oil position in a portfolio because there's so many different things you can do with it, and it impacts central bank policy so much, right? It like sort of goes through these cycles where central banks they tighten monetary policy, crash the economy, demand for oil goes down, then they print money, and the economy recovers, and then you get inflation and higher oil prices and also more demand for oil, which is like a catalyst as well, and that causes higher oil prices, which then sort of cascades into the next tightening cycle where so you sort of know that like if you have a oil position, a large oil position, and it starts to moon, right? I mean, you can start selling it into cash because you like know what central banks are going to do to respond to it.
Yeah, I own some miners, producers, and they pay a great dividend too, which is nice.
Yeah. I mean, I mean, I don't, when you're investing in equities, it's a whole other ball game, and I personally, I think it's kind of irresponsible because when you're investing in equities, you have to do financial analysis of a company. You can't just invest in an oil company because you're bullish on oil. I mean, oil could go up in value, and the company you invested in is just poorly ran and just goes out of business. So you really have to do financial analysis, and most people don't know how to do that. They don't know what discounted cash flow is, how to read a balance sheet. So most people shouldn't be buying individual stocks. I think if you buy like an index, right? If you were to buy like I'm sure there's a weighted index out of there of like all the top oil producers. Then
yeah, you can do everything under.
That would be a much better strategy than trying to
Yeah,
pick which.
yeah, absolutely. If you're not an expert in the space,
Yeah.
is there much like talk in the U.S. about? I know U.S. news likes to only talk about the U.S. for the most part, but like, is there much talk about the like recession in Germany or the economy in Europe at all? Or
You mean like talk about that in the U.S.?
yeah,
Uh, Not
well, I
really.
mean,
And
you're in the financial space too, so
yeah, it's.
it's
I mean, it's sort of one of those things where like Americans, almost stereotypically like are very uh, inward focused, and but the rest of the world is looking at us too. It's like we are sort of the center of the world, whether you like it or not, and that sort of people are just ignorant to what's going on in other countries. I mean, aside from whatever the current psyop is, right? Like you know what I mean? Like, besides whatever the current government narrative is, like beyond that, most people don't know about, the economic situation in Germany. No. But yeah, I mean, I do a little bit. Again, I'm not like an expert, but I do sort of have a good sense of, Germany. Again, that's a good example of somebody who, shot themselves in the foot because they didn't understand the importance of energy inputs. Right? They basically. I mean, I remember last year, man. Like, electricity went up over 20x in the summer, and like, and then crashed. I mean, like, and then natural gas went parabolic too, and then like went negative briefly. So you have this like massive, which just tells you like the energy markets in Europe are totally fucked.
oh, I
And
know. I live here. I pay the bills. I moved from Canada where we had hydro for our electricity, and I was paying $50 every 2 months, and now I spend like 300 in the peak last winter. It was like 300 a month just for electricity.
yeah, and if you look at like so the volatility in the energy markets in Europe is insane. It unbelievably insane. I've never seen anything like it.
Yeah, it's
And
it's wild.
and people will look at the chart, and if you look at the chart, because of the volatility, some of the lows will actually be lower than other places in the world, and people will be like, well, if you just waited to buy all your natural gas at that exact bottom, you could have got a great price. And it's like, dude, that's not how markets work, man. Like, no company can survive that volatility.
Yeah,
Like,
well, I mean, here in Portugal, Portugal and Spain government had an agreement where like there's a price. They literally put a price cap on the natural gas for electricity last winter. I mean, I'm looking at it right now. The it's what is it? It's liquefied whatever their figure is, but it went up to 300 euros or $300 per unit, and then it went all the way down to 20, and now it's back at 53.
yeah. I mean, the
It's
the problem with price caps is I mean, so I'll say this: like, price controls are that is the canary in the coal mine. If you see that, bad news, bad news, because they destroy markets, and like they always lead to shortages, which lead to higher prices. That's just the reality. And I mean, what? How do people react to that? Okay, say the value of the euro collapses, and so the government imposes a price cap. People just go, okay, well, we're not gonna sell this to you for euros. Like, fuck you.
mm-hmm.
That's just how it happens, and then you get shortages, and then the energy gets more expensive. So
Yeah, I mean, I guess in this instance, last winter was a anomaly. The war had broken out, and they
yeah, I
had,
mean,
they voluntarily cut off Russia, so they knew that it was a short term thing, and it just they literally it's because LNG takes time, and their tanks are only so much, so it was just a near term problem. But it'd be interesting to see what happens this winter.
yeah, I mean, I honestly don't wish bad things about. I hope they make it through this winter. But I would describe Europe as being at peak complacency. You know what I mean? Like the fact that they made it through last winter without severe issues.
It was the warmest winter in record.
Right. It's like some people interpret that as like, oh well, the problem's not as big as we think. That's why I think it's peak complacency, and it's like,
Yeah.
it's like,
I think.
they don't understand that, like, you can't print money to buy energy. It just doesn't work. Like,
Well, you can.
You can't.
Well, you can 1 year at a time, but over the course of 20 years, no, you can't.
I mean, you'll need to get bailed out. That's what's going to happen. Like, the U.S. will have to bail you out. That's where that goes. And I think they will. I mean, Europe is so intertwined with, the global markets. Yeah.
Yeah. Well, we'll see.
I mean,
they'll get bailed out, but the U.S. might be going into its own recession. Although the job market seems pretty strong. It's probably another 6 months of kicking the can down the road on this recession.
Yeah, I personally think you guys have an energy crisis. You have a migration crisis. You already have a union that doesn't make any sense. The European Union is just a financial union that completely, benefits people in Southern Europe to the detriment of people in Northern Europe.
Yeah, well, that's right. For the North, they just keep on adding more countries further east so that they can bring in the cheap labor.
Yeah, but when it comes down to the brass tacks and you get down to energy, it's so there isn't much oil in Europe. There is some, and most of it's in the North Sea, which is mainly owned and controlled by the UK, but some Norway too. So Norway and the UK would, be, and Germany has always been the economic powerhouse. So, I've always thought that, the European Union will last until Germany has a recession, and they just say, "Fuck you!" Like, we're not going to subsidize you guys anymore. Like,
yeah, we're just going to print for ourselves.
Yeah, I mean, and that's a huge problem because, say Germany does that, right? And that can happen. People act like that can't happen. Like, we're kind of at the edge of a global recession, and as bad as things are in Germany, like they can get way worse. In that scenario, you get radical politicians, right? I mean, that's kind of how Hitler came around. I'm not saying that you'll get another Hitler, but you will get radical politicians and people who are willing to say, you know what, fuck the EU, we're done. And in that situation, like, if you have, what would happen in reality is, Germany has all this debt denominated in euros, and all of a sudden they would say, fuck you, we're not paying our debts back in euros. Here, take this. We're paying you back in this new Reichstag or Reichsmark currency, that we're using now. And then you have a European banking crisis.
Yeah, things are going to have to get a lot worse to get to that point, though. I mean,
I don't know, man. I mean, we're if there's one thing, again, I don't want to be a doomer, but it's just like, you look historically, like, war is a chaotic and destructive force that changes the shape of maps in countries, and it's, things happen quickly, and sort of things are, again, like, we're sort of like caught in a trap because, like, kind of like going back to what we talked about, the energy inputs and how much of the oil is controlled by the East. Like, if we even tried to fight that war against the Russia, the Middle East, China, I mean, we don't have enough oil to do that. Wars take a lot of oil. Like, it's not even, like, physically possible. So I don't think people realize that, and they're sort of like, pushing it to a limit on like hubris, like, oh, like, we're so badass. And it's like, yeah, okay, the American special forces are pretty badass. They gotta go to Air Force, like, okay, but they don't, there are certain things you need to run an army. Like, you need production, you need supply lines, you need energy. Like, we don't have that. And I think we've seen that in the Ukraine war, like, sort of, because people, like, when we went to war with Russia, people dismissed Russia because they said, oh, Russia has less GDP than California. But what is the GDP of California? It's software and selling expensive homes back and forth. That doesn't win wars. It doesn't matter that you have all that GDP. Like, you need oil, you need production facilities, you need manufacturing, you need logistics supply lines. So, and that reality, we saw that reality, like that experiment played out in Ukraine. And it doesn't matter how many dollars you give them, like, they don't have the infrastructure to win that war. Russia does. So,
Yeah.
And that reality is kind of, I think, dawning on people in America. Again, there are smart people in America, and it's like, the politicians, they want you to fight a war with China with weapons that are made in China. Like, okay, how does that make sense? It just doesn't. So I think there'd be a big effort. I think sort of that reality is hitting us, right? People are waking up to that, biophysical reality of the world, and you're starting to see, I think you'll see an effort for manufacturing to return to America. And you already saw that with the Semiconductor Act, where, they started to be a realistic threat of China invading Taiwan, and I think people shit their pants because they're like, oh, there wasn't the capacity to build semiconductors here. And so they shit their pants and started building.
Mm-hmm.
And that reality is, I think, again, people are waking up to it, but we're like so far behind that there's no way we can catch up, unfortunately. But I mean, I love my country, but it's just and we do have major oil reserves, so it's not the end of the world, but we have a lot of catch up to do. And it's not clear how we get out of the sovereign debt bubble. I mean, it is clear to, inflation, basically.
Yeah, the only way out is to grow out of it.
And that would sort of line up with like American manufacturing coming back on shores, because in order to do that, you would have to debase the dollar to do that. First you'd have to, you'd get government subsidies to infrastructure, but beyond that, you would beyond that, you'd have to debase the dollar to make American exports competitive.
I saw Larry Fink on today, and he said that one of the big things that's top of mind for him is the debt servicing globally, government debt servicing globally, and he said, we can't shrink our way out of it. The only way through is to grow our way out of it. So that's going to turn into massive investment, public and private investment, and it's going to be lots of growth, and it's going to be higher inflation for a long time.
Yeah, that's the only, unless you think the government is going to default, right? Voluntarily.
Yeah. And so that's why he said,
I guess that is technically possible. But,
I mean, they'll inflate their way to growth before they'll do that.
They have to. That's the only way out.
Yeah.
It's a mathematical certainty. It sort of ties into the other topic I wanted to talk about, which was sort of the Fed's balance sheet, and kind of, in my opinion, how they're committing fraud. And so let me start with the premise that. So I found this paper that basically showed that during the pandemic, the Fed tilted, or the government tilted its issuance toward the short term. So the Fed bought up that short term side of the bond. So let me just read this piece from the paper real quick. But it says the fact that the Fed was able to alleviate the dislocations by substantially tilting the maturity structure of U.S. government liabilities away from long-term securities it purchased towards very short-term liabilities it created, invites comparisons with emerging market crises where the shortening of maturities by sovereign issuers is a typical response to investors' concerns about the issuer's ability to repay. So what you're seeing is the issuance has been skewed towards the short side, and obviously we see that in yields. That's why the yield curve is inverted, right?
So they led that? They were the ones that started all of that?
Well, the government was. The Fed was just buying any bond during the pandemic. Like, I don't know that the Fed was purposely doing that, but the government was purposely issuing treasuries on the short-term end of the yield curve.
I still don't get why the government didn't issue a shitload of, when rates were at zero, why weren't they issuing long-term debt? Like, was there a reason for that? Like, seems ridiculous. Or was there just no demand for long-term at zero? Or
I think that's it. I mean, who would buy a 30-year treasury yielding 0.2%?
Right.
Nobody. I mean, you have to have a buyer for, you.
And they were trying to keep the long end of the curve at zero.
Yeah.
For.
So where this gets interesting though is the Fed. So this is where it ties into fraud. Because when I was looking at this, I was thinking about this idea, but I didn't know, I couldn't tell like which side of the yield curve the issuance had been on. But so where it gets interesting is when you talk about the Fed's BTFP program. So that allows banks to pledge their impaired collateral at par value, right? So they're underwater on these risk-free. They're down 70% on these risk-free bonds that they pledge to, and I use risk-free in air quotes, but that they pledge to the Fed, who accepts that collateral at par and issues them the loan to give them liquidity, to shore up their liquidity. And when they do that, when they put that loan on their books, they issue the credit honoring it at par value, but then they put it on their books as impaired collateral. So their balance sheet...
They're printing money then.
Right, but they're hiding how much they're printing because they're again, it's fraud. They're putting it on their balance sheet as is one value, and then they're issuing credit as though it's another value.
Yeah.
And so, and also, like when you see the balance sheet like decline, the Fed isn't actually like selling bonds. That people think that, but that's not what's happening. They're just letting the bonds that's on their balance sheet hit maturity, and once they hit maturity, then that collateral is not on the balance sheet, and it rolls off. And because most of the printing occurred during COVID, and most of it was skewed towards the short end, most of the bonds on their balance sheet are also skewed towards the short end. And because most of the printing occurred in 2020, a lot of those bonds have actively hit maturity and are hitting maturity, right? We're like, pretty far away from 2020. We're 3 years, almost 4 years out. That it's sort of, when you really dive deep into it, it's like, it's like the balance sheet declining, a little bit is not, it's just fraud,
I came across something a chart yesterday or a few days ago that actually surprised me. It showed that the BTFP program hasn't really grown in subscription since significantly. Really, it's been flat since the beginning of summer. Really, since the regional bank crisis earlier in the year. Is that surprise you? Have you noticed that? My thoughts were that as the long end yields kept on rising, that there
Yeah.
would be more and more people participating in it. But
So actually, that makes sense to me, and I'll tell you why. Because, you know, bank reserves and liquidity are a confidence game. And if you inspire confidence,
right,
people
that
will
was the
withdraw.
commentary. Was
Yeah.
as long
So,
as it's there,
right.
then the confidence is there.
Exactly. So,
Yeah,
like so you had the Silicon Valley Bank collapse. There were other banks that collapsed too, like First Republic, among others. There were a lot that collapsed. And then you saw a flush of withdrawals, right? People just, and that's they had to unveil, or the entire banking system would have collapsed. Literally, the entire banking system would have collapsed. But it's like a confidence game because so you saw that initial spike when they did it, but beyond that initial spike, they inspired confidence and the withdrawals stopped. Had the
yeah,
withdrawals not stopped, you would have just seen, um, that facility just go parabolic. I mean, go infinitely parabolic. But, and again, it's only, the banks are insolvent. That's the thing I think people haven't really wrapped their heads around. But it's really important to understand is like, we're watching the Sam Bankman-Fried trial and like thinking about how crazy it is. And like the situation banks are in right now, are not that different.
well,
They,
he was a lot more, even after all the selling, he was a lot more collateralized than the average bank in America.
well, no, I'm just saying like they, yeah, essentially. I don't know what I'm sure they weren't running any reserve requirements at FTX, um,
No, but
but
crypto in general is 100% reserve, not fractional reserve.
yeah, essentially what happened in FTX is, people were buying Bitcoin on the platform and, SBF was sending it to his friends in Alameda to,
To sell.
to buy Luna, right? Or I should use a better example, like to buy some shitcoin. So
FTT.
yeah, or FTT or Solana, right? They're buying Solana, and then Solana goes down 90%. Oops, we can't honor withdrawals. Well, the the banks are in the same situation. They bought all these bonds that have gone down in value 70%. The money's not there. It's like the same situation as FTX. They are wildly insolvent. And
Yeah.
the only reason the BTFP hasn't exploded is because people feel confident in the system.
Yeah.
That's why things can change so fast. Like if like, and I think this will be the Rubicon moment. If like the Fed steps in to intervene in the markets and it doesn't work, whoa, that's it. Like if people lose confidence in the Fed's ability to backstop a system. Because I guess theoretically they can print an infinite amount of money, but you know,
Well, that's where that day is, a few years away, but that's the day that, Bitcoin just gaps up several $100,000 in the same day, right?
yeah, and it'll that type of thing happens really fast. So like, by the time you know about it, like it's over, and because all the smart money is like tuned in, dialed in before you are. And I just don't think people. So to me, that's why like Bitcoin is not risky. To me, it's not risky at all. Like you're keeping, a lot of savings in a bank account is very risky. Because like if you can if they play whack-a-mole and like Silicon Valley Bank goes down and they just have to bail that out, like the amount you need to print to bail out Silicon Valley Bank is it's not that much, not enough to debase the currency significantly, but like a 2008 crisis where like every bank needs to be bailed out, like then you can see and nowadays, like if that were to happen, like the amount of debt you need to bail out is like 1,000 times more. So you just get into weird territory where it's like, I don't even know how to crunch the numbers on how much debasement that would be. It'd be a lot. I just don't know how to.
I still strongly believe that we're going to see other countries defaulting long before, even the euro, but the U.S. or the euro, because those are essentially the two world reserve currencies, right?
Yeah, I mean, yeah, definitely. I mean, especially on their dollar-denominated debt, because
right,
they can't
and
print.
so as those other currencies fail, the euro and the USD, just because of global access and liquidity, and they act as a safe haven. It's not a surprise, or coincidence that um, you know Tether, the number 3 crypto, right, is continuing to grow, and they're primarily focused on one product, and that's a digital US dollar. And that they're, becoming one of probably the largest global holders of US treasuries, right? I mean,
Yeah, that's the
who
thing.
knows?
People are like, they're talking about banning Tether. I'm like, dude, that is never gonna happen.
Yeah,
Like
no, there's no fucking chance.
they're
They're
like
like,
the biggest buyer of treasuries.
yeah,
Like,
they're basically part of the U.S. government. Give
yeah,
it
I
another
mean,
couple of years.
yeah, they're like, yeah, okay, the U.S. is gonna shut down their biggest buyer. Like, yeah, give me a break.
No, and growing. Only growing customer, right?
Not only that, but like it's very easy to surveil what happens on the Tether blockchain, which is
Hmm.
different than the Eurodollar market, which is like very opaque and very like even the Fed doesn't really understand the Eurodollar market, and it's not open and public information like a blockchain is. You know, so
Pretty
yeah,
incredible. I'm just looking. So Tether's at 83 billion now. That's
yeah,
pretty solid growth for through a bear market. Well, I guess they just ate BUSD's lunch. Um,
yeah. I mean,
market cap. They've been parabolic. Yeah, they didn't stop. November 2022. Let me go back further.
well,
Market cap. Yeah, so between Luna until FTX, basically there was a dip, but they're now at all-time high. The all-time high in May 20, just before the Luna crash, their all-time high was 83 billion, and they're 83 and a half now. So, yeah,
yeah. I mean,
Tether's at all-time high market cap right now.
yeah. The reason why that's not going to change is because, like, a lot of like we live in civilized countries, so at least for now, and so we don't really realize this, but if you're in a big portion of the world, you can't, like if you're in like even a country like Argentina that's still like civilized but shitty, like you can't hold US dollars in a bank account in Argentina.
Oh,
Like
absolutely. The
no,
Argentina, Turkey, all these African countries.
no, they'll
Uh,
forcibly convert your dollars into the local currency.
yeah, I know. I'm sure we've watched the same Sailor
Yeah, and like
YouTube
and then
videos.
what are you gonna do about it? They have an army. Like you
Well,
fuck.
and the cool thing is you can travel with it too. Like,
Yeah,
I've
that's the thing. That's
I've
what I'm saying.
traveled
It's
the
like,
world, and I've gone and cashed out my USDT at a little money exchange, like no ID, whatever, and they just hand me US dollar crisp, $100 bills.
yeah. I mean, if I lived in Argentina, I would hold Bitcoin in Tether. Yeah, of course.
Hmm.
because I mean, I'm sure you pay stuff with Tether, like and you have a little bit of dry powder if you need to, buy a Bitcoin dip or whatever. Now, I think what's really interesting is, so I think there's a huge, people sort of downplay Bitcoin's ability to serve in transactions, and I think that's people are sleeping on the Lightning Network. I think the Lightning Network is revolutionary, and
Are you using it? I haven't used Lightning yet.
Yeah, I've used it, but I don't I've never ran a node on the Lightning Network.
Yeah, no, I'm just wondering what's the best wallet to use.
I mean, you can use a lot of different configurations, but yeah, I don't really have a recommendation on that. But one thing I am interested in is what Square is trying to do with the Lightning Network. So they're, at least to my knowledge, the only company who's really pushing integration with merchants and Bitcoin payment that's now possible through the Lightning Network. And whereas before, you sort of have a situation now where you've got all these Bitcoin hodlers, right, who have Bitcoin, but there's not a lot of peer-to-peer things. I mean, there's a few. There's overstock.com. You can buy stuff with Bitcoin. You can buy stuff on eBay with Bitcoin, but most, you can't just walk into a place and pay with your Bitcoin in a normal place. But that kind of, so people have this idea that it's merchants don't want to accept it. But that's just not, in my opinion, just doesn't make sense, because of course you would want to accept that. Merchants, if you think about sales as a form of cash flow, and cash flow, you can project that cash flow into the future. So if you have the opportunity to accept sales in a currency that generally rises over time, you would want to denominate your cash flow in that currency. I mean, and
now you're getting into deep financial literacy.
Yeah, exactly. But I guess
they just want to pay their bills and and get new inventory in.
Right, exactly. Yeah, but the TLDR is that. So I think this is the important part of it, where things get interesting. Is right now we have a system where Bitcoin value is gated by conversion to fiat. And the point I'm trying to make is that that's not going to be there forever, right? There will be a vast, network of peer-to-peer transactions. And a lot of merchant activity will just occur in Bitcoin.
Right.
And there will be no gateway to fiat, there's no conversion, just fiat, Bitcoin to Bitcoin. And it'll be, it's partly accelerated, ironically, because of the capital gains tax, right? You impose this, obstacle to the market, and entrepreneurs solve it. And, whereas if you want to cash out to fiat, you got to pay capital gains tax. But if you can pay peer-to-peer, there's no conversion, there's no sale. At least not, because the conversion of the dollars is where you get hit with the tax. And you can do it at a rate that's cheaper than what credit card companies cost or charge. I mean, the Lightning Network, most people don't realize this, but credit card companies charge about $3 to $4 a swipe. So you'll notice this if you go into a small shop and try to buy a bag of peanuts that costs $1. A lot of times the clerk will say cards only purchases over $5, because
small shops will pay up to 10%.
Yeah,
it's disgusting. I think that's the biggest, one of the biggest reasons why the crypto is going to continue to grow in terms of merchant activity.
Hell yeah. And people don't realize it because they don't pay the fee. They don't see it,
Mhm.
but they do pay it because the merchant bakes that cost into all the goods. Um, so that's obviously a inefficiency in the market that's going to be innovated away. And the person who can figure out how to do that is, probably going to be an important company for sure. And what's interesting about that is when you start thinking about the Lightning Network, like Bitcoin does not have a yield. If you get a yield on Bitcoin, like you're getting scammed, but it kind of does if you think about the Lightning Network. And you can, if you run a Lightning node, you can. I mean, it varies, but you can make about a 2% annualized yield, which is pretty significant. And then you can start to think about that type of thing, And it's just introducing something into Bitcoin that wasn't previously there. But it's, if you provide a service for a Lightning Network, you can get a yield. So.
Yeah, man. I think I'm gonna head off pretty soon. Is any close?
Yeah. All right, man. It was good talking to you. Looks like we
Yeah,
got.
man. Glad we got this week's in, even though we couldn't do it on Monday.
Yeah, for sure. All right, man. Talk later.
What's you watching the markets at all this weekend?
Yeah, for sure. I
Loading
mean,
up on more GMX?
what's that?
Loading up on any more GMX?
I mean, not right now. I mean, I did buy a little bit, but I'm not looking to buy huge altcoin positions at this phase in the market. I think I will be at a certain point, but I do think, especially when when we get to the halving and post halving, the Fed starts printing money, things start getting crazy. That would be the time when I would have heavy altcoin bags for sure.
Yeah, it's hard to see the relative upside.
I mean, I have
With
a little bit. Like I have enough that because like if you sleep on it, you won't understand it. It's like one of the interesting things about crypto. You have to like one of the catch-22s of Bitcoin is like for a lot of people like you don't really start understanding what Bitcoin is until you hold it. But then most people won't hold it until they understand what it is. So you create this catch-22. But if you can just buy a little bit, that's or convince somebody in a roundabout way to buy a little bit. And that's what I'm trying to do with GMX. But yeah.
Are you still loading Ethereum, or are you sticking to Bitcoin right now?
Yeah, I mean, I bought some at like 45, and I loaded up pretty big at 32 as well. And I'm more focused on Bitcoin right now. I see Bitcoin sort of leading in the rally, the front run rally of the spot ETF, sort of into the end of the year, and then maybe into a little bit through the winter. But yeah, I'm sort of looking at the market as probably Bitcoin dominance. And that actually, I mean, you'll get altcoin seasons here and there, but that's just the way cycles typically go. I mean, you see,
Yeah, I think
even after the halving, like early on in the next cycle, you'll still see Bitcoin lead. So
yeah, well, that's the thing, right? It's just about your time horizon. If it's what you're buying now is to hold for 2 years,
yeah,
it's
my time horizon, I do not hold altcoins. Like yeah, that's not what I'm into. But I do that, with Bitcoin. Yeah, just hold Bitcoin. But no, if I have altcoins, I'm not. I'm not holding them for sure. I don't. I see them as a different category of thing. They're. But I also appreciate the value there. I mean, I think GMX is, if it becomes a leading decentralized exchange, then you've got a lot of incentive there. But again, that's fine. I'm okay like building a position slowly as the market tells me something's a winner. That's fine. I don't need to like go all in on something early on, but it is also important to get a little bit at the lows.
Mm-hmm. Yeah, well, it's hard to buy it at 100 when you were watching it at 35.
Yeah. Well, I also got lucky. I mean, like GMX, like kind of, it was really on a run, and then it like sort of collapsed and almost got to like capitulation, which for me